Did you know that renowned investor Cathie Wood is repurchasing a large number of Tesla stock? You probably wouldn't want to miss this. Cathie Wood, founder, CEO, and CIO of ARK Invest, remained strongly bullish on Tesla, even though the electric vehicle manufacturer lowered its outlook for deliveries this year. In fact, Wood bought more Tesla shares as the stock fell after the company reported what experts perceive to be lackluster third quarter sales and said it will miss broad annual growth targets for the year. Wood has always been vocal about her bullishness and Tesla, so her followers did not take much notice of this move. In early October, after Tesla reported missing deliveries, the company announced its delivery and production numbers through a press release. Essentially, Woods bought another 190 shares of the EV company on top of the over 132,000 shares she bought earlier this month. This was her firm's second purchase of 190 shares in Elon Musk's company through the Woods flagship fund ARK Innovation ETF. The biggest position in her flagship ARK Innovation ETF, which has lost more than 55% of its value this year, is Tesla. Following Tesla's Q3 report, Wood made his most recent purchase. Some analysts were particularly interested in the management's disclosure during the most recent Q3 earnings call that it anticipates falling short of the 50 growth objective for 2022 vehicle deliveries compared to last year. In Q3, Tesla produced 22,000 more cars than it delivered due to logistics issues. However, those cars have buyers and aren't just going to sit in inventory. Whether or not customers take ownership of their cars during one quarter as opposed to another shouldn't matter to long-term investors, and production isn't the only thing growing quickly. According to Tesla, it will meet its goal for vehicle production. In the third quarter, net income more than doubled, while total sales increased by 56% year over year. Some investors are also worried about how Tesla's profit margins would fare when competitors begin to join the market in large quantities. It is not very surprising that the automotive gross margin decreased by 258 basis points year over year due to supply chain limitations, and companies in the automotive industry face higher costs due to rising labor and material costs. Nevertheless, Tesla's automotive gross margin remained stable at 27.9% in comparison to the previous quarter, suggesting that the firm is offsetting the higher costs. Not many people are as bullish on Tesla as Cathie is. She believes the stock will be worth more than $1,500 by 2026. Despite the fact that Tesla has raised the prices of its products, investors should interpret this as a positive indication that the price hikes are supporting the company and aren't sapping demand in the long run. It's not even trading at 20% of that figure at the moment. However, Elon Musk, another well-known figure, seems to be in line with that aggressive pricing goal based on his most recent earnings report. Elon Musk, the CEO of Tesla, made the audacious claim that his business might be worth more than the combined value of Apple Incorporated and Saudi Aramco. Elon Musk, the CEO of Tesla, estimates the company's value to be approximately $5 trillion. Apple's market capitalization is approximately $2.3 trillion, while Saudi Aramco's is approximately $2 trillion. To say it plainly, being a strong believer in innovation, Cathie Wood consistently expresses her support for Tesla and its upcoming innovative projects. Wood has gained recognition for her investments in disruptive innovation stocks by employing an iterative process that integrates top-down and bottom-up research. Wood is still extremely bullish about Tesla stock. ARK Investing aims to fund businesses that could profit from cross-sector innovations, such as robots, artificial intelligence, and energy storage. Blockchain technology with DNA sequencing. Tesla is a good fit because it has revolutionized the car industry with its cutting-edge electric vehicles and self-driving technologies. Wood has always been a supporter of the business, which she stated in her letter for the third quarter was a top performer. She also talked about how businesses that prioritize disruptive innovation have the ability to surprise investors by experiencing significantly exponential growth trajectories. Deemed Tesla's doomed to failure, they did not. Understand that Tesla was a robotics, energy storage, and artificial intelligence company, not an auto company. Wood wrote, however, Tesla critics pointed out that the company has a limited product lineup that hasn't been updated for years. Still, the electric semi-truck will begin deliveries on December 1st to its first customer, PepsiCo, and Tesla CEO Elon Musk himself said that he will personally be there. The much-anticipated Cybertruck is also on the final lap, according to CEO Elon Musk, and should begin deliveries next year. Also, Tesla is expected to introduce a lower-priced EV soon that will expand its product line of passenger vehicles. Musk also told investors the company is working as quickly as possible to increase battery production capacity. Its energy division also includes battery storage and solar rooftops, and has more demand than it can supply. Sales from that division represented 5% of total revenue in Q3 as its energy storage deployments jumped 62% year over year. All of that should result in many years of growth coming from different places for Tesla. In a recent interview with Yahoo Finance, Musk said that while some investors may be worried about the current situation of the economy, Tesla's company is recession resilient because of the worldwide trend shifting to electric vehicles. According to Cathie Wood, it's noteworthy that the United States gasoline demand this summer fell to levels not seen since 1997. That's actual demand destruction, and it couldn't have happened without electric vehicles taking significant market share away from traditional automakers, according to Wood. Wood also believes that worries should be directed toward the traditional auto industry rather than the rapidly developing EV industry, as he believes that gas-powered vehicles will become obsolete in the next 5 to 10 years, and that the traditional auto industry must find a way to transition to electric vehicles. Many innovations in the car business, in Wood's opinion, have placed the traditional auto industry and, by extension, traditional automakers in a challenging position. Cathie Wood, who has over 40 years of investment experience, gained wider recognition in 2020 when her ARK Innovation Fund returned nearly 150%, propelling her to a level of notoriety she hadn't yet reached in the previous 5 years. In harm's way, Wood cited Tesla's autonomous taxi platform as an example of such innovative change. While many people place their trust in Wood's opinions, others are reluctant to trust her. These figures have made Wood somewhat of a star in the financial world, particularly in the fields of innovation and technology. Her asset management company, ARK Invest, is well known for taking risks in technology and innovation that are viewed as disruptive. Some of the sectors in which the fund invests are robots, genomics, artificial intelligence, blockchain, and renewable energy. Wood, who is also renowned for occasionally making bold predictions about the future, maintains that electric car manufacturer Tesla is still a cheap business and projects that Tesla will eventually be valued at $3 trillion. Consequently, Cathie Wood and ARK Invest concentrate on theme investment methods, a thematic approach to investing, as opposed to focusing on particular industries or businesses or pursuing short-term trends, emphasizes broad, long-term patterns. Woods' bullishness on Tesla can be explained by the fact that thematic investing looks for disruptors who have the potential to shape the future of the world, even if the underlying technology is not fully developed. If a tech technology or disruption seems to be on the verge of a breakthrough, or if there are developments in news surrounding a particular related company, there may be brief increases in the price of an asset or fund. Numerous companies that are exploring and implementing various cutting-edge technologies and prospective solutions, such as artificial intelligence DNA sequencing, are among Woodstock's favorites and what she included in ARK's funds. Genetics, robotics, energy storage, 3D printing, blockchain technology, and slash or autonomous technology are many of these that fit. Wood is presumably quite excited about the firm and its possibilities because of Tesla. As a whole, though Cathie Wood may engage in a lot of buying and selling with her cash, individual investors ought to consider the company's future state. With a trailing 12-month price-to-earnings ratio of about 60, Tesla appears to be well positioned. However, if the company can maintain these levels of production and net income growth, long-term investors who follow Cathie Wood's example and purchase at current prices would appear to be making a wise investment. For additional content on Tesla stocks, don't forget to subscribe to this channel.